What is up, YouTube? Welcome back to Stacks by the Numbers, and I wanted to do a quick little earnings prediction video here. There's a handful of companies reporting earnings. I know it's late today, so we'll look at tomorrow, I guess, after market close, and there's just a couple of names I wanted to look at. First one up, Lululemon Athletica Incorporated, ticker symbol LULU, listed here on the NASDAQ. This stock, $306.13, down half a point. 0.16% here on the day. Recently got some price target cuts here. Evercore cutting price target from 515 to 400, and there was also, it's maintained a buy here at Truist, but they also, they adjust their price target from 498 to 415, keeps the buy rating. And this recent article here, earnings may miss, according to Oppenheimer. I don't know where this is coming from, because Lulu has been pretty solid here. As you see, bottom of the screen, a lot of greens here. The company has been growing very nicely over the years. I mean, it's basically something as simple as, athletic gear, and they sell yoga pants. But at the end of the day, you have to follow the money. And the market cap right now, 40.1 million with a PE of about 25. So the PE might be pretty average. Might be kind of copacetic for the type of company that we're looking at, right? But the market cap here at 40 billion could be potentially viewed as undervalued, in my opinion. EPS has been very solid here, 4 beats in a row. Look at this annual growth here, just breaking up. This is, again, coming out of lockdowns. 21, 6.25 billion, up to 8.1 billion, up to 9.6 billion, maintaining a nice net margin right there of about 16%. And if we look quarterly, we can see Q4 has been their best quarter. They recently got up above that $3 billion milestone. And look at that net margin following suit, almost 21%. Very impressive here. Now we're getting to Q1, right? And we can see they're expecting 240 on the EPS side, about 2.2 billion on the revenue side. Now, Q1 of last year, the company did 2 billion even, right? So technically, we're going to be looking for about 10% revenue growth year over year. But we can see that we hit 2.2 every single quarter after that throughout 2023. So if the growth, continues to compound on itself, if you will, then in my opinion, I'd probably give them the benefit of the doubt, and I'd probably go with Lulu calls. And also, if we look, again, almost 10 billion for the year, they're profitable, market cap 40 billion. So they're only trading about 4 times annual revenue. So, as much as people might think it's high, it's actually could be viewed as undervalued, in my opinion. And those other price targets of 400, 415, I mean, that's basically back to this 200-day moving average here. This is the daily here at Stock Charts. But in my opinion, it got beaten up, back here, and it can easily fill these gaps and start to gain some momentum here. And we might be able to see about 350, a break above the 50-day moving average here after earnings, potentially. In my opinion, we might see about 325 here, back to this mid-Bollinger Band tomorrow. We have the RSI down here at 34 on the daily, coming out from the sub-30s. But we also have the MACD potentially flattening out and about to cross. And we speak about the momentum and the volume coming into a stock as a company is going into earnings, right? So in my opinion, if you want to ride it through earnings, of course, that's entirely your own prerogative. But in my opinion, if we have a low RSI and volume's going to come in on the earnings hype with the MACD crossing, then this might be a situation where you might want to jump into some calls, maybe, in my opinion, and, just get out and secure profits, hopefully, if it runs up. Sorry, that was my keyboard. But, secure those profits going into those earnings. And that is actually a pretty good strategy to ride the momentum of a lot of these stocks as they go into earnings. And then you secure profits just in case the earnings miss, right? And then if the company happens to beat earnings, but it doesn't move that much, or it might go down, then you can readjust and reevaluate the situation. But we can see here, stock was up here at like 500, dropped down to 300. Look at the MACD, completely fell off a cliff. Basically been down since like February. And it tried to hold that 200-day moving average here on the weekly, but rejected hard and dropped to the 300s. Now, of course, we can see about a 10% drop if they happen to miss on that revenue. But again, they have been pretty solid. They do have a pretty decent track record. And the RSI here on the weekly as well, you can see sub 30. So this is why I'm saying it might be potentially gearing up, and, people forget about it. They beat it up. They take the spotlight off of it, and then all of a sudden they beat earnings. It gets a couple of upgrades, and then before you know it, it's back at like 400, and everyone says, oh, I wish I knew at 300. So We could say maybe potential like bear flag, but again, we have earnings coming up, so that might throw a wrench in any pattern that we might be able to see. So, in my opinion, I guess I'd give them the benefit of the doubt. I'd go with Lulu calls, in my opinion. Next company up was Five Below, FIVE. Listed on the NASDAQ, $137.35, down about 3.5 points today, 2.4%. Markets were up, and then we went red, and then we stormed back green, and then in about the last like 30, 40 minutes, we kind of flattened out here. Dow trying to hold about 70 points here. VIX pulled back, was up about, I believe, about 4 or 5%, pulled back to about 1.5% here. But Five Below, this is a store, in case you don't know, this is a store where basically I think everything is like $5 or less. So in this type of economy, this might actually be a decent play here. Market cap right now about $7.5 billion. PE 26 could be viewed as a little high. EPS was solid, had a slight miss last quarter by about 13 cents, 3 or 4 of the last 4 quarters. We can see annually this company growing very nicely as well. Right? Going into 2020, we're at about $2 billion, coming out almost $3 billion, above $3 billion, and then over $3.5 billion. So that's what I mean. It's right. We speak about this when there's belt tightening, when people are dealing with higher inflation, and obviously, basically every goods and service across the board is more money. They're paying more at the pump. What do? They go to places like Five Below, right? Dollar General, right? These are the places that are getting the foot traffic, where people can get a couple of things that they need for some of the lowest of the low prices. So people are doing a lot of bargain hunting here, and that's why, in my opinion, you're seeing a company like Five Below getting a nice revenue bump here over the last couple of years coming out of this lockdown, dealing with this hyperinflation. So 3.5 billion market cap, 3.5 billion revenue, 7.5 billion market cap. So this company, in my eyes, not really too extended right here. Let's check some of the financials real quick. And we can see the debt about $1.75 billion. The debt has been climbing as well, but they are making good use of it. It does seem that way. We're up to about $1.75 billion. Let's see, 1.5, 1.6, 1.69, 1.74. So the debt does consistently keep climbing. If we compare free cash flow 304, free cash flow 281, so we're technically up, about 7% in change here year over year. Cash on hand was $332 million back here. Kind of held, got cut in half there, and made a slight bump back up here. We have assets outweighing liabilities on both the short and the long term. Assets now above $4 billion. Liabilities followed, but still below. Assets minus liabilities, total equity, we can see $1.58 billion. That's the highest it's been going back the last several quarters. Book value per share climbing from sub 21 up to almost 25, and now 28.71. So pretty decent cash generation here, 4 or 5 below. And things like the inventory turnover has been pretty solid. Our debt ratios are technically down currently, but overall, gross margin made a nice jump here to about 38.5%. Operating margin jumped back up to 20% where it was back here. But again, that, could have been coming off one of their better quarters. But even the following quarter here was about 5.8%. So based on how the company is growing, they might be able to come in with an operating margin maybe close to around 7%, in my opinion, which, of course, would be a green flag. EBITDA, again, technically, if this is their best quarter, it's technically up year over year. So, now trading less than 5 times book. That's actually the lowest the ratio has been. Price to sales, same thing, 2.19. That's the lowest it's been over the last several quarters. Price to cash flow down at 15.5. That's the lowest it's been. And the PE also technically is the lowest it's been going back the last several quarters. Enterprise value looking like a touch over $9 billion. Market cap right now $7.5 billion. I mean, we know that earnings are 100% a gamble, right? Please understand the risks involved. And we can see that the revenue actually has been missing more times than not. Only 3 beats of the last 8 quarters. EPS has been solid, 6 beats in the last 8 quarters. Annually has been looking very nice. Slight miss there, 2% miss on the year. On the annual side, the revenue has been more solid than not, 5 beats over the last 8 years. Looking to get above 4 billion now for 24 and then jump up to 4 or 6 and almost 5.5 over 6 1/3. So overall, in general, in my opinion, this is probably a very decent long-term investment. And after getting beaten up, coming off last quarter again, very, very slight miss, and they really beat it up here, going from 200 to 128. But for the most part, I do like 5 below. I do like 5 below. Now, we could see a pullback here to like the low 1-teens, right? We could pull back maybe to like 115, maybe even 110 potentially. But in my opinion, I'd probably give him the benefit of the doubt as well. And let's just check stock charts very quickly here on the weekly. Yeah, similar situation, right? We had this big sell-off. RSI now on the weekly down here at 33. So this is why, again, we could have a potential rally now coming in and maybe out of these earnings if they're good. MACD about to bottom and curl back towards the upside. So this is what I mean. These are two names that we can see some big momentum maybe tomorrow going into these earnings. The RSI was bottomed out, recently started climbing up a little bit here over the last couple of days. RSI now down to about 43 3/4. Stock looking to hold that mid-Bollinger Band right now. What is it? 137.41. Stock right now 137.28. Still have about 40 minutes to go. MACD bottomed out about a month and a half ago, has been slowly climbing up, was about to cross, but actually keeps climbing. In my opinion, I'd say probably back to 150 should be no problem. And of course, if the numbers are good over time, we might even see this 200-day moving average here, 175. So I guess in my opinion, I'd go with 5 calls as well, personally. ChargePoint, we were watching this pattern, and I mentioned here that, you know, this was kind of like I believe it was a descending triangle that we had. Looks like a flat bottom. And I mentioned that we could potentially break here to the downside. I think we did an update like over here. And they've just been underwhelming, right? I mean, missing by 10-15 million at a click. Even here last quarter, we can see estimates. Again, we were up here at almost 125. They post 110. So we lower estimates to 119. Now they post 115. Now estimates are down at 105. 700 million market cap. Still losing 1 1/3 a share. EPS 3 misses in a row here the last 4 quarters. The revenue did start to jump up, but again, as you see, the net margin is actually widening here over the last couple of years with the more that they make. Net margin in 22 minus 73%, net margin in 23 minus 90%. Switch over quarterly here, 150, drop down to 110. So now we're going Q1, this time last year, 130 million, right? And it cost them 79 million. So now we're expecting 105. So even hypothetically, if we have kind of a downward consolidation channel, and in the technicals we could pop up here, maybe 195, maybe going into earnings if people want to pump it. But again, going from 130 down to 105 year over year with your losses widening tells me that if they even post, let's just say 108, 110 million, and they beat that 105 estimate, it might cost them 90, 100 million to bring in that number, right? Because the losses are going to widen because now they brought in less money. So your expenses are probably going to be pretty in line with where they were, but now because you brought in less revenue, right, you're technically making less profit or / more loss, right? So in my opinion, I'd have to say probably ChargePoint puts. Unfortunately, they do not look like the shining star in the space. And I know someone might jump down my throat. And listen, of course, whatever you do with this information is entirely your own prerogative. This is only my opinion. And of course, earnings are completely a gamble. We know this. Look at ASTS, right? The company technically missed earnings, came out, extended the contract with AT&T. Everyone got pumped about that. And then randomly Verizon comes out as well, like a week or two later. And that helped pump the stock up to the 8s and the 9s. So I don't know. I honestly don't know what's going on with the telecom stocks, because all of a sudden they all made a move within the last couple of weeks. I don't know if you guys realize this. And you had T-Mobile, I think it was with US Cellular, I think is the company, right? And they spent like $4.5 billion for some towers, I think it was. Honestly, I didn't look into it, but it just caught my eye that you had, AT&T with ASTS, and then Verizon randomly as well. And then we also had the news with T-Mobile. And this is what I said. It was a while back, right? So this would have been more of a longer term hold, but this is what I said a while back when they were beating up the telecoms. And I said, in the long term, they're probably going to make a rebound, and it's very cyclical, right? So in my opinion, for a long-term investment, you do want to scoop up those companies on the dips. And something like Verizon, I think, got beaten up all the way down to like $32, $31 a share. Now the stock's back at 41, right? They pay you a dividend to own it. And that's what I mean. Slow and steady wins the race. Consistently dripping, DRIP, dividend reinvestment program. But I'm going off on a tangent. So we're looking at ChargePoint here. RSI basically middle of the road here, 48 1/3 on the daily. Stock looks to be holding above the 50-day moving average here of 165. Stock right now 166. MACD actually recently crossed to the downside, but isn't really moving much. We have a pretty tight Bollinger Band range here. This is why I'm saying with the earnings news coming out, we could pop maybe to the 190s. Top Bollinger Band, which was also this fib right here, about 194. But in my opinion, again, they've just been very underwhelming. And almost reminds me of STEM here, just in a consistent, downtrend. But, I mean, the revenue was growing, I don't know, 710 million. Let's look real quick. We got the debt is about half of that market cap right now. 300 million in change. Cash is up technically from sub 300 million to 357 million. Free cash flow is up as well, was almost minus 55, almost 55 million. Now it's sitting here last quarter at minus 46 million. Assets outweighing liabilities only in the short term. Assets, assets haven't moved much. Liabilities just kind of holding flat here at about 790. We're back at 327 where we were a couple of quarters ago. And the book value per share just seems to be kind of slowly dwindling away. Now, we were trying to hold like that high $91 level. Now it's down here at 78 cents. I don't know, man. I don't know. Of course, if we look at the trend of negativity and a down stock, right, and then we try to bet against it and kind of like swim against the stream, you could see big returns, but this could be a speculative play if you wanted to jump in some calls or jump in some shares. Return percentages are down. Gross margin percentage actually jumped up to almost positive 20%. Operating margin, what is this? Q4. So Q4 is back here. Operating margin was 49%. Now it's minus 69%. The gross margin technically up 0.09% year over year. EBITDA down as well, was minus 44%. Now it's minus 63%. Net margin, this is what I mean about the losses widening, right? Net margin minus 60, minus 51, minus 61, and then we're back to minus 80, minus 100 plus, minus 80. So inventory turnover down big. Asset turnover was climbing, slowly pulling back. Debt to assets is down slightly. Debt to equity is up. Long-term to assets is down. Long-term to equity is up. And again, just very inconsistent. So in the long term, in the long term, again, you might like the stock, and of course, it's up to you. But again, looking at something like this, going from 130 million this time last year down to 105, missing on revenue 5 of the last 6 quarters. missing on EPS the last 3 quarters with the loss widening. And, you know, a company in this situation, the last thing they want to see is the loss widening. And unfortunately, that's what's been happening. So, you know, I have to say, just from first glance, in my opinion, ChargePoint puts. ChargePoint puts, in my opinion. Last one I wanted to look at, I know there's other names, but this is the last one I wanted to look at, was Victoria's Secret. Victoria's Secret, we looked at it last time. I think it was, I don't know, was it here? It might have been here. Did an earnings prediction video. I said, in my opinion, puts, right? They're probably going to come in light on the revenue, go woke, go broke. And they ended up actually only slightly missing on the revenue. But then I believe they lowered their guidance moving forward. Stock ended up taking a big hit here. It was like 26 and change. Dropped down to like 17, 18. I remember some people giving some credit to me on that video in the comments section, making a, you know, several 100% return. So that was a good call. But we know earnings are a gamble. But again, sometimes you just have to follow the trends of what's happening. And Victoria's Secret, I think if I heard correctly, is potentially like, quote unquote, like going back to their roots. Because I know, again, they just tried to put, like, you know, just random people on the covers and on the runways, and people weren't buying it. JP Morgan adjusts price target to 16 from 15, maintains underweight. See, okay, wait, return the runway show. Comes at a time of need for the lingerie clothing beauty retailer. Company needs to attract attention to the brand to drive sales, both in US and but it will take, yeah, still take years. Yep, I agree with that. Doesn't happen overnight. There's still a debate around represents what it stands for. Yeah, in my opinion, I do think they may have shot themselves in the foot. Wait, what is this? Preliminary. Company sees first quarter 7 to 12 cents, up from prior guidance of a loss of 15 to 10 cents. That's quite a range. First estimate of loss of 3 cents. Sales growth 3 to 4%. Company reaffirmed the outlook of fiscal year 24 revenue of approximately $6 billion versus estimates of $6.198 billion. I believe that's why it took the initial drop roughly 3 months ago, the last time we looked at it. Anticipates operating income to 275. CEO said, quote, "We delivered meaningful newness in merchandise and brand projection during the quarter, and our customers responded, particularly in April, which was our strongest of the 3 months. Retail environment in North America remains challenging. We experienced improving trends throughout the quarter in both our stores and in our digital business. Continue to experience strong growth in international brands. Sales increase in the mid-teens again." Yeah, I don't know. You know, it's funny. Preliminary results supposedly above expectations. When was that released? 7 days ago. So what was that, here? No, that's too long ago. So that was like here. And we shot up to 24. So we could potentially come up here, maybe to like this gap fill here where we drop down, looking like about, yeah, like around this fib here, 2470. What was the low here? Low here was 2490. Yeah, could be possible. Honestly, in my opinion, though, I really don't know if I would risk it. And that's just my opinion. I know Victoria's Secret has been disappointing people more times than not. You can see 3 rough quarters in a row. Last quarter beats on EPS, misses on revenue, guides, you know, much weaker outlook moving forward. Now all of a sudden we get preliminary results that are randomly, you know, above expectations, and they talk about how great April was, but they don't speak about February or March, right? 1.75 billion, 17 PE. And now Q1, 1.4. And we're expecting a drop in revenue from 141 billion to 135 billion. Yeah, I don't know, honestly. In my opinion, I'm really not sure if I'd give him the benefit of the doubt, if you will. Debt jumps back up here. 28531 down to 27. That's technically the lowest it's been the last several quarters. Q4 cash flow 677, now it's down to 557. This time last year they had 427 million, now they're down to 270 million. Short-term liabilities outweighing short-term assets. Cost of goods jumped up. Yeah, actually it's in line with last Q4. Gross profit is up. Operating expenses did take a leap up, though. This time last year, about 480 million, now 550 million. That is quite a leap. Operating income, though, back up here, 277 million. Yeah, I don't know. I really don't know if I'd personally give him the benefit of the doubt. And we could make the argument, of course, well, we got preliminary results. You know, they're above expectations. But again, they even with this supposed quote-unquote preliminary Q1 beat supposedly coming that they're forecasting, they still said that revenue was going to be about 6 billion. And analysts were originally expecting about 6.2 billion. And the stock, again, was beaten up all the way down here to about 16. And it ran up basically 50% to 24 recently off of that news. Honestly, it might already be factored in. I would consider, in my opinion, VSCO puts. VSCO puts, in my opinion. I just feel it's not a company that can be trusted right now, personally. Here we're looking on the weekly RSI, basically middle of the road here, 52. Stock recently got above the 50-day moving average, having a bounce off the Bollinger Band. So MACD recently crossed to the upside here on the weekly. So this is what I mean. We could run up, maybe, who knows, fill that gap. You know, 2470, 2490 maybe. It might go on a tear going into earnings, but RSI recently topped out, right? So we had a pullback today of about 3.5%. On that news, it brought it back above the 200-day moving average, which does look very flat now. 50-day bottomed out, starting to climb up. Yeah, I don't know. In my opinion, I'd assume, I mean, you know, we know earnings are a gamble, and it's all assumptions, it's all predictions, but in my opinion, I'd expect a drop back to 18. MACD has been basically steadily climbing since they last disappointed a couple of months ago. Yeah, I don't know. In my opinion, I would say Victoria's Secret puts, in my opinion. What else we have? Semtech? Yeah, I don't want to look at anything else. So we'll call it there. But again, earnings, 100% a gamble. Please understand the risks involved. And, you know, this is just my opinion. But, yeah, Lulu, what'd I say? Lulu calls, 5 calls, ChargePoint puts, Victoria's Secret puts. Yeah, that sounds about right. I'll end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm, right? Helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, they're very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for stopping by. Have a good day, guys.